Hey everyone, welcome to 4 Minute Videos for Traders YouTube channel. In this YouTube channel, I will be explaining stock trading in 4 minute videos. Myself, Anil Sagar. In the first season, we will be talking about options trading and we're going to start with absolute beginner topics. In the first episode, we will try to understand how does options work. Prerequisites for this video, just passion for learning stocks. In today's topic, we will be exploring options with real world example, and also we will take a look at some of the basic terminology of options. Quick disclaimer, any content on this channel should not be relied upon as an advice or interpreted as providing recommendations of any kind. It is your responsibility to confirm and decide which trades to make, and all trading strategies are used at your own risk. So, how does options work? Let's say Lucy would like to sell her house and Choni would like to buy a house, but the house cost $100,000 and Tony right now doesn't have that much money. But he would like to enter an agreement with Lucy saying that I will purchase this house within 2 months at $100,000 price and I will pay you $1,000 as a contract value. If I am unable to purchase the house, you can keep the $1,000. So they will enter into an agreement with a validity date of 2 months within which Tony has to buy the house. But the contract gives a right to buy, but Tony can walk away from the agreement at any point of time as well. Or he can sell the contract to some other person. Let's try to understand how does this contract will help Tony to actually make the money or lose the money. Let's see the best case. Within 1 month, there is a new project that came up near Lucy's house. The housing prices increased. The house cost became $119,500. That means the contract value, originally $1,000, now became $20,000 because the cost of the house has been increased. Tony made $19,000 profit on the $1,000 contract that he made with Lucy. But remember, it gives right to buy but not mandatory. Tony can sell this contract to some other person and book the profit of 1900%. Here, Lucy might have lost potential gains of $18,500. Let's see worst case. If the house price drops below $100,000, then contract value at the end of the 30th September will become zero and Tony will incur 100% loss and Lucy will keep the house as well as $1,000 profit. That's how options work. Let's try to now see basic terminology of options. In stock markets, instead of house, you have stocks. Like contract between Tony and Lucy, you will have options contract and every contract will imply 100 underlying shares. Contract value is options price. Contract expiry date is options expiry date. And right to buy price, which they have agreed, is actually options strike price. That's basic introduction to options. Hope you like the video. If you have any questions, please feel free to use comments below the video and share this video with your friends and subscribe to the channel to get notified for any future videos.